Happy to see you all. I'm Carrie Dillard. I'm the Programs and Public Policy Director here at the Chamber. This is the second seminar as part of our Small Business Month celebration. We're so glad you could join us. We have a lot of other seminars this month. If you haven't already registered with those, please check them out. In addition, our small business cohort is starting June 7th. If you'd like to learn more about that, we have a flyer at the back, and I'd love to talk to you about it more after the seminar. And in fact, our presenter today is the instructor for our small business cohort, Chris Wooldridge. He's the director of the Murray State University Center for Economic and Entrepreneurial Development. He's helped us out with the cohort. Now this will be the third year for that program. And he's done many of these seminars for us as well. This is actually the third of a three-part series of seminars. The first two were cash flow and pricing, and we have held those multiple times. About a year ago, Murray State, the City of Paducah, and the Chamber gathered together and thought, what can we do to help small businesses? And so we started with the cash flow seminar, and then we built on that, and we did cash flow, and then we did pricing. And so this is just the next piece, the next tool in the toolbox. Today we're going to be talking about projections and financial planning. So we're happy to host this seminar for the first time ever. And we want to thank our seminar sponsors, F&B Bank and Living Well Radiology. They're the sponsors of our seminars all month long. Andrew McGlennon is here and Terry Lundberg. Would you all like to say a few words?
Welcome. Thanks for coming today. So glad that you are investing time in your business. And Chris is a fantastic presenter. He's one of my favorite people to listen to when it helps to coming to develop and grow our business. We did change our name in March from Lundberg Medical Imaging. If you didn't get your handy little desk caddy, we have a few left over and we're rebranding. So I thought, hey, let me bring these because who doesn't love some good office supplies? So anyway, welcome this morning. This will be available to look at again on the Chamber's website, or it's the YouTube channel, I believe. And there's some ones from the past as well. So if you don't quite get everything, or if you have to come back and take the math test next week, you'll want to watch that video again. So anyway, welcome. Living Well Radiology is our area's independent imaging facility. We have 2 locations, and I basically push paper there. So welcome and thanks for coming, and thanks to the Chamber for letting us sponsor this series of seminars for y'all.
Hi, good morning. Kind of echoing those comments, we are proud to be part of the sponsorship for these programs because F&B believes in these programs as well as the educational value that the Chamber puts together. And I'll just say my last plug as a career commercial banker, these are some of the most important things when you come see me that you need to be aware of in your business. So, definitely pay attention and hopefully you learn something from this. But again, we're proud to be part of it. Thank you.
Thank you, Terry. Thank you, Andrew. So thank you to our presenting sponsors, F&B Bank and Living Well Radiology. Again, a shout out to the City of Paducah, who's our supporting sponsor today, and they've been with us for these cash flow type series seminars for a long time. So thank you to the City of Paducah, and Melanie Reason, who is a business development specialist, is here. I know that she'll be around after the seminar if you'll have any questions that she can help with or answer. And now I'll turn it over to Chris Wooldridge.
Thank you. Thank you, Carrie. Good morning to everyone. Good morning to everyone. Good morning. Thank you. I appreciate that. Well, good morning. Thank you also to our sponsors. Thanks. We couldn't do this without you. And it's a great testament to the community and to the leaders and supporters of this community that they all come together to do this kind of work. And this work is really important for building the entrepreneurial and the ecosystem that we want to have in our communities. And so thank you so much to F&B, Lundberg, and all the others who have helped support this. Melanie, thank you as well. Thank the city. We appreciate it very much. So this morning, what we're going to do is kind of bring together the previous 2 seminars into how do we take what we've talked about in the last 2 seminars and use that going forward. So we've talked about cash flow. We've talked about cash, the importance of cash in our business, and how to plan for that. And then our most recent session, we talked about pricing, right? We talked about how do we price what we sell. We talked about the different strategies. We talked about how we can evaluate our costs, evaluate our targets. What do we want to reach from a goal standpoint? And so how to price and how to manage cash flow and pricing is so important in developing that planning. And so this third session is about how do we take those important cash flow perspective and pricing perspective, and how do we roll that into, okay, what do I do from here? How do I go forward? And so this session is about projections. And so we're going to touch a couple of key points about how we get started. We work with a lot of small businesses, and I work with a lot of business and industry, and some of the toughest challenges are, well, I don't know what my sales are going to be next year, right? I don't have a time machine, so I can't really go forward and look at it. And so all we can work with is what we can work with, right? And we really have a lot to work with. Some of it's in our head and some of it's on paper, but we've got some starting points that really will help us begin this financing planning, this financial planning, if you will. So this financial planning process contains these two. Cash planning, which involves the preparation of the firm's cash budget, where we looked at that during that seminar. We talked about the cash coming in and the cash going out on a monthly basis, and what we expect from a cash coming in perspective, what we expect on a cash going out perspective. And then we talked about profit, looking at planning through pricing. Okay, so let's step back just a little bit and think about, from our planning, we've got two different steps. We've got the long-term strategic planning, and then we're going to have short-term planning. So if we're going to look at projections, we've got to think about where we want to end up, right? We kind of think of our roadmap. So for all of you who are getting ready to go on vacation, right, do y'all have an end in mind? Where you want to end up, right? You want to end up at the beach or the mountains or whatever. And so part of the planning process for your vacation is, where do I want to end up? And then we think about, how do we get there? What's the roadmap to get there, right? That's probably how we do that. We probably should do the same in business. We should think about where we want to end up. What's that end in mind? One of Stephen Covey's principles. But generally we don't do that. Sometimes we get into business and every day is a new day, and we're not really sure where we're headed. We just know that we ended the day maybe a little bit better than we started it. Well, that's not a good way to go on vacation. We just don't get in the car and drive around and hope we end up somewhere. At least I don't know. We shouldn't do that in business either. And so the idea of planning is, let's think about how we think about our business and how we plan our business. The first is from a strategic standpoint, long term. From a strategy standpoint, how do we want to approach overall? Where do we want to be 2+ years? And so from a long-term strategy, we look out 2 to 10 years and say, where do I want to be? Now, for some business owners, that's like really a stretch, right? It's the first time we've thought past yesterday, or thought past tomorrow, right? Or thought past a year out. But as a business, we want to start thinking about it. Where are we headed? Where are we going? And so none of this, by the way, is set in concrete. It's all set in Jell-O, okay? It's all going to change. But at least if we have a plan, we have a direction. Where do I want to be 2, 3, 4, 5 years down the road? We start stretching our perspective. We start stretching our mind and thinking. We also think about what areas of our business do we need to start thinking about. The bigger the business, the more departments or the more areas that we have to think about our business. So if you've got folks that work for you, you've probably got some kind of an HR function going on. Now you may not have a big HR department, but you do have personnel. You probably have shipping. You probably have production. You probably have delivery, right? Now, it may not be on the scale of Ford Motor Company, but you still have these functions in your business that you have to address. And so part of our long-term strategic approach to planning is, how do all of those areas contribute to the operation of the business? How does it generate me money? How does it cost me money? And how do I manage that? And then there's the two objectives that we have from our long-term approach. One is, are we creating new products or services that are going to be increasing, hopefully, our net worth? How are we increasing sales, which should hopefully boil down into profits, and then increase our net worth as owners? And so that 2 to 10 year out there, what do I think is going to sell in that 2, 3, 4, 5, 6, however many years? And I may not know today what's going to sell 10 years from now, but if I start thinking along those lines, I can start projecting, well, here's where the market is going. Here are the things that are changing in the market. Do I see demand changing already in 6 months, 12 months, 18 months? And I start trying to predict what's going to sell. What do I have to create to stay in the market, to stay relevant? What do I have to offer in the market to stay relevant? And then the other objective is, how do I get the cash to do number one, right? If I'm going to create a new product, if I'm going to deliver a new service, it's probably going to need additional capital. So how do I come up with that capital? Is it money that I borrow, or is it money that I have? And remember, we've talked in the previous two seminars, there are only two ways you get money. It's out of your back pocket or somebody else's, right? It's either your money or it's somebody else's. And the somebody else's is probably going to cost you a little bit of money. And so that cost that goes with, how do I offer new products or new services, is part of that planning process, right? Because if it's not my money, I'm probably paying somebody else back, which means that's a load on my cash flow, and we have to plan for that. Then there's a short-term approach, okay? The short-term approach. This is important as well. This is more tactical, okay? So this is more, what do I have to do? If I have a plan out 5 years, and I say, this is where I want to end in 5 years, or this is where I'm trying to get to in 5 years, what steps am I going to take between now and that 5th year, the end of that 5th year, that are going to get me there? What steps along the path are going to take me to that road, to that goal? Well, that's where our short-term tactical steps are, the tactics, the things we're going to do there. That's out 1 to 2 years, right? So we look 12 months from now, where do I want to be? What do I need to do between now and the end of the year, or now at the end of 12 months, to be headed in that direction that I want to go into? And that's where we get into our forecasting. That's where we're going to get into our pro formas, our projections. How do we approach that? How do I know what I want next year to look like? How do I plan on next year or the year after? Well, that's what this is about. So in your packet, you've got a really busy schematic here, okay? This won't be on the test, but you're in business, so every day's a test, right? So the idea here is to think about not jumping into numbers. I work with a lot of companies, and the first thing they want to do is jump immediately into the numbers. I work with a lot of small business startups, and the first thing they want to do is jump quickly into the numbers, okay? We need to step back and think a little bit about this. Let's not put numbers to it now. Let's think about sales, okay? Let's think about how I'm going to sell. Specifically, what I want you to write on your notes is this word capacity, okay? Capacity. And by capacity, that's your ability to produce and deliver products and services, okay? There's no sense in us thinking about, well, I'm going to sell $1 million worth of stuff if I have no ability to produce it or deliver it. So General Motors can only sell as many cars as it can make. It can't sell any more than it can make, right? And so it has to understand what its capacity, its ability to produce a product. From a small business perspective, for you and your team, you only have so many hours in the day, right? You've only got 48 hours in a day, correct? And so you've got your own life goals. You've got goals for your business. So you should sit back and think, what is my capacity? What is the capacity of me to work, to produce? And what is the capacity of my team, my operation, to produce products and services? Because if we don't know how fast we can run, if we don't know what we're able to produce, then the numbers don't really mean a whole lot. Because I personally would like to earn $5 or $6 million a year, right? Well, I can't do that if I've got to go to work every day. I've got the capacity to work only so many hours a day, right? You have only so many hours in a day. And in your business plan, what you're looking at from an operational standpoint, what hours am I going to be open? How much can I produce in those hours that I'm open? So if I'm producing a service, maybe I'm an accountant, how many tax returns can I see or review? How long, how many hours does it take to review that? If I'm going to be a doctor and I'm going to see folks, patients, how much time can I dedicate to them? How much can I bill for those services? If I have the ability to make jewelry, how much time goes into it, right? How much time can I do? And so if I can only produce so much, I can only sell so much. Now that doesn't mean I have to do it myself. Maybe I've got suppliers, maybe I've got other folks that help me, but that's another capacity issue. Maybe to sell more, it's not just me, it's how do I bring others into my capacity ability, if you will, of the business. So we have to understand our capacity because then we can decide our first step. How much can we sell? And so part of your process, part of your reflection standpoint is, what can I sell? I can sell X amount of cars. I can sell X amount of haircuts. I can sell X amount of candles. I can see X amount of clients. In the time that I'm allowed, the time that I have dedicated to this, to generate billings or sales. Based on that, if I want to sell 1,000 candles a week, how do I get those? I have to think about my projections from a production standpoint. Do I build it or do I go buy it and resell it? So we've taken that step that's not mathematical, that is, how much can I do? What's my capacity? Then turned it into, what does that capacity allow me to sell? And then based on those sales, how much do I have to produce, either in-house or bring internally from outside? Now, the rest of that kind of gets into some discussions that we've had, cash budget. We haven't gone into a balance sheet format. And typically that's okay because that's kind of after we think about income. And so what we're going to focus on is the income statement. Now, if we think about cash flows, not to be too geeky, but if we think about it from an accounting standpoint, we've got 3 different operations that are going on in our business that affects our cash. One is operational. That's us operating, right? We're doing what we normally do, whether it's selling haircuts or candles or whatever. That's the operation of the business. It generates cash. The second that affects our cash is the investing side, okay? Are we spending money to buy machinery and equipment? Are we spending and investing to purchase assets that help us generate sales? That affects our cash. And then we've got this third part, the financing, okay? The financing things that we do, like do we sell stock in our company? Or do we even have that? Maybe we don't have stock in our company. Maybe it's just us or us and we, right? And so we look at borrowing money. How do we get cash into our business through financing? Like I said, it's either your money or somebody else's money, and this would be the somebody else's money. All 3 of those are functioning in your business, okay? Think of those as 3 ways that cash is being affected by what you do, the operating side, by what you buy or sell in terms of assets, capital assets that generate you sales, and then the financing part that helps you create those sales through assets. Now, everything that's going on in the business typically impacts cash, and so we have to think about how we affect our cash. So the projections that we're going to think about are either going to be sources or uses of cash. We might be looking at our projections and say, I want to grow sales. Okay, sales should increase cash in my checking account. Checking account is an asset, right? If I use that money out of that checking account, that's a use of money. So everything that we do, and not to go into this into great detail, but we have sources and uses of cash that are affected by the operation, and we should take those into consideration when we're looking at our projections. Okay, so let's get to kind of the guts of how we get started. What I usually tell my businesses and when I work with my clients is I want them to sit down and think about some assumptions. Okay, again, we're not talking about numbers yet. We're going to make some assumptions. And in fact, a couple of the slides that I'm going to give you or that you already have that we're going to go over are going to exemplify a little bit of what we make from an assumption standpoint. This is not necessarily a number thing as much as it is a let's perceive what we think is going to happen. If we look at the income statement, okay, we look at Money coming in and money going out, okay? Sales, less operating costs. Write down on a sheet of paper what's going to change, okay? What do you know now? If you've been in business, you've seen how your business operates. You see how cash comes in, when sales happen, when costs show up, when I've got profitable months and not profitable months, when I've got positive cash flow and negative cash flow. So when we think about revenue, here are some things we might think about. We've thought about, hey, I want to increase my sales. How much? How much do you want to increase sales? Goes back to capacity, right? Maybe I can only do so much, so I've got to bring somebody else on. I've got to hire somebody else, or I've got to find some other capacity. What kind of growth number am I thinking? If I look back at my previous year's operations, or even previous months, do I have any kind of growth that's starting to show up? Do I have normal growth? Normal growth being just the operation itself is gaining growth. Maybe I'm seeing a 1 or 2% increase in sales each month. That's a nice piece of information to know, right? So I write that down. What about inflation? What's inflation doing right now? High, low? Y'all hearing anything about inflation? Is it affecting your pricing? Affecting some decisions you make? What you're buying? Are your costs going up? Are your prices going up? Probably so. So if inflation, we know what inflation is today. I think the annual rate right now is right at 5%, 4.9%. If we know that that inflation is going to affect our prices, what we pay, it's probably going to affect what we charge. Think back to our previous session where we talked about incorporating those costs and those inflationary costs, supplier costs, et cetera. Then if I'm going to look at next year, I'm not going to assume I don't have any inflation, right? Because it's 5% now. So if I know that now, I can account for that, right? I can account for that. So I can look at what expenses I have that might be impacted by inflation and project next year's being higher. Historical numbers and trends. If you've been in business for any length of time, you've got some data to look at, even if it's just 6 months. But if you've got a couple of years under your belt, you can go back and look at those numbers and say, what did sales do from year 1 to year 2? How much did they go up? Or how much did they go down? I can look at what my cost of the stuff that I bought and resold, cost of goods sold. What happened to that? I can look at my operating expenses. What happened to my insurance costs? What happened to my employment costs? What happened to my lease? What happened to all of those costs? You can look at those and compare them from one year to the next, do a little bit of a comparative analysis. And you can kind of see these are kind of stable and these are kind of going up. And so it's reasonable for me to look at those numbers and start to derive some of the motion that's happening in my financial statements. Now, all of this is starting point information. It's not ending point, right? This is what's helping us get started in thinking about our business and how it functions financially. What about economic impacts and government impacts? Are any of your businesses impacted by government regulations? Sort of, kind of? Yeah? Chris, you probably have got some regs you got to follow up every once in a while, right? Can't ship to North Korea. There you go. Those regulations that affect business operations are going to cost you something, right? If you are in an industry right now, I'm working with an industry that is in the electric vehicle space, and they're looking at a lot of regulations. A lot of regulations. Well, before they get started, we already know that next year these developing regulations are going to add 10% cost to some of their production. So we're going to factor that in. We can look at that and see. Other known one-time, unique, or anticipated items. This is where you step back and think about, what does next year look like? Maybe I've got this one-time really great contract with this company, or with Fort Campbell, or with some other organization, right? I know I've mentioned before, I work with a young lady who sells equipment to Fort Campbell, And that's not going to happen every year, right? Because they don't buy it every year. But the next coming year, there's probably going to be a nice chunk of change show up from a sales standpoint. Now, hopefully it's from a cash flow too. It also actually gets paid. But from a sales standpoint, next year might look pretty good for her. She's going to wrap that in. This is where you as the owner sit down and think through what is next year. Is there something out there on the horizon that I can plan for from a revenue that's going to change next year, that's not going to repeat? Expenses. We can look back at our expenses. You can pull your tax returns if nothing else, pull your financial statements, look at your income statement, and there's that long list of things that you have to pay to operate, right? Your operational expenses, insurance and leases and supplies, etc. We can look at those and say, what have they done over time? What are the trends? But we can also look at what are the projections for that from a, what do we expect fuel to do? What do we expect plastic cost to do? What do we expect to happen in our suppliers market? We can contact our suppliers and ask them, what do you see sales pricing looking like for the next year? I have a lot of companies we work with that are constantly in contact with their suppliers. What is the cost of plastic doing? What is the cost of metal doing? What's the cost of whatever? And the suppliers say, look, we've got an increase coming up, and next year it's going to be 5%. Boom, a piece of information I'm going to factor into my numbers when I start looking at those. Contractuals, how many of y'all have contracts to either buy or sell? If you've got a contract, and that contract states in there what the expenses are going to be for the next 1, 2, 3, 4 years, you can incorporate that in your estimates for next year. If you have a lease, how many of y'all have leases? Anybody have a lease? You got a contract, okay? You got a contract to pay rent, pay lease for maybe the next 3 years. And if that payment is set in the contract, that's a given. That's now a known. You know for the next 3 years that that lease payment is going to be X. We can build that income statement with that information. Anybody got any insurance? Yeah, right? Are y'all talking to your insurance agents now about what costs are doing? What workman's comp's doing? What liability coverage might be doing? You might want to check with those folks. Check with your agents. What do they see doing? What do they expect rates to do next year? You can get that information. Anybody that you write a check to, you might be able to call and go, hey, how are things going for your company? I'm starting to do some analysis. I need to know what costs are going to do next year. Do you have any inclination? And they can begin to plan on that rather than it be a surprise. Again, economics, the government, we look at our costs as well. Our fixed costs and our variable costs. Our fixed costs are not broken costs, although they could be broken. They might break us. That was a joke, sorry. But our fixed costs are generally those costs that happen not irregardless of sales, but they're kind of detached from sales, right? Your rent payment, your lease payment is the same whether you sell $1 of goods, services, or $1 million, right? Probably. Your lease payment on your vehicles for your company, they don't change regardless of how much you sell. So those costs, we can look at last year's, we can look at this year's and kind of see, well, that cost is kind of fixed. It really doesn't affect based on sales. But if sales go up, there are costs that change because of the volume, right? Like cost of goods sold. If I sell more stuff, I got to buy more stuff to sell more stuff. And so as a percentage of the sale, you realize that some of that sale dollar goes to buy the stuff that you sold, that cost of goods sold. It's a variable cost. It varies based on what you sell in the volume that you've sold. And so if I expect sales to go up next year, then it's reasonable for me to say cost of goods sold is probably going to go up as well. Well, how much? Good question. We're going to do a quick exercise and talk about that. What other things do you see? What do you know already other than what we've mentioned that next year is going to look different for you, for your business on an income or expense? Anything?
I have a service, so when I think about my students, like the graduating seniors, if they move out of state or travel, like those
Okay.
but also there are incoming
Mm-hmm.
eighth graders and freshmen, so that could replace that loss.
So you've got some that are graduating out of your program, they're going to move on, and then some are going to come in. So how might you look at the group that's coming in and determine what that size looks like? Is there a way to do that? Exactly. So you're reaching back to your suppliers, right? And saying, what does the volume of students look like? We do that at the university. All the universities do that, right? What do the graduating high school populations look like in those areas that are primarily in our footprint? We're doing those kinds of estimates. Excellent example, thank you. So just going through that exercise of just looking at that financial statement, looking at that income statement or that tax return and saying, well, how much money did I make last year? Am I going to make the same amount this year? Am I going to do something different? Whatever that difference is, we want to put numbers to it. Okay. So we've got about 20 more minutes, so I want to make sure that we get to the math part, because I know that's what you're really wanting to do, right? And then the quiz is the last page, so don't start on that just yet. Pro forma income statement. So one of the approaches that we use in finance and that you as a business owner are going to look at is, how do I take what I know either has already happened from my financial statements, tax returns, et cetera, how do I meld that with what I think is going to happen, right? And it's not a guess, it's you've sat down, you've reflected on it, you've thought about, I think sales are going to go up, I think costs are going to go up, I think my gas costs are going to go up, or my lease could change, or whatever. How do I meld those together? Well, one of the ways that we do that is we look at the revenue expenses as a percentage of sales. Now, there is no perfect approach, right? But what we do is we look at what logically makes sense and can help us predict. And so what we look at is the income statement and all the items of the income statement as a percentage of sales, because ultimately everything's kind of sort of tied into how much we sell, right? And so we do that as a percentage, and here's our example. Cost of goods sold divided by sales. If I look at that number, if I just look at my income statement and say, well, this is cost of goods sold was this month, it was this amount, or this year, and I take that and divide it by the amount of stuff I sold, that's a direct correlation between I got to buy it to sell it, right? And so if I bought it, there was a cost of goods sold. If I sold it, I got sales, that's my revenue. And so I can look at how much stuff costs me as a percentage of each dollar of sales. That gives me a number. That gives me a percentage. And so here's a very basic example, okay? So we could look at 2019 in our example, and we see sales of $150,000. And then we've got these numbers. And I want to look at what do I think is a percentage. So if I divide those percentages into sales, I'm going to get a number. So everybody pull up your calculator and look at your phone and access your calculator. And we're going to do a little number here. So I want you to take $150,000 and multiply it by 0.8 and tell me what number you get. 120,000. So you get to cheat because you got the answers on the other sheet, right? So if I know the percentage, like I took cost of goods sold and I divided it by sales and I got a little percentage, I could do the reverse, right? I could say, well, if I know my sales and I know what the percentage is, I can calculate the number. Does that make sense? Everybody good? And so if I can calculate these percentages, I should be able to back into what were my cost of goods sold for 2019, what my operating expenses were for 2019, and I can even get into the operating expense list and say, well, in 2019, my interest expense was about 1% of my sales. Is that information valuable to you? Yeah, it sure is. Because if we can go backward, we can also go forward. It's the same approach. So, I don't think I have an answer for this one. We may actually have to do the math. No, we're going to actually have to do the math. Okay, so get your calculators out. And in 2019, we're going to predict the sales. We're going to predict the sales for 2020, and then we're going to calculate our expenses. So here's a little math. So the first thing I'm going to do is, if I gave you 2019, okay, if I gave you 2019, and you would get this from your tax returns, your financial statements, whatever. You're going to pull your tax return, you're going to pull your financial statement, and you're going to say, well, I got all this stuff right here. I know I got sales of 125. My cost of goods were $80,000. Operating expense 10, interest expense 250. So now I want you to calculate that percentage of sales. What's 80,000 divided by 125? What's that percentage? How much? 64? Everybody get the same number? 64,000? Okay, so we're going to write 64,000 in there. What's 10% of 150,000? 64%? Yeah. Awesome. Thank you for catching that. So it's a percentage, right? We're getting a percentage. So it's 0.64. Now what's the percentage for operating expense? What's the percentage you got? $10,000 divided by 125, what'd you get? How much? 8%, okay? So put 8% there. And interest expense as a percentage of sales, 2,500 divided by 125, what'd you get? 2%? Okay, so we got 64, 8, and 2, right? Now, we can project 2020 based on just that information. Because what you've done is you've said, I'm going to make an assumption that sales is going to grow 6%, okay? In your infinite wisdom and all the planning that you've done, you've said I ought to be able to grow sales 6%, okay? So what is sales going to be in 2020 if I'm going to grow 6% over 2019? $125,000 times, I'm sorry, is it 125? Yeah. $125,000 times 1.06, what do you get? How much? 132,500. Everybody get that? Everybody get that? Now what we have is we have sales based on a projection. We just did our first projection, or at least for this session, right? Now, guess what? You now know that last year, my cost of goods sold were 64% of my sales, right? I just calculated my new sales amount, which was 132,500. Multiply that by 0.64. What number do you get? 84 what? 84,800. Everybody get that? Yes. Okay. Now, the next two, you do those. Same approach. All right, what'd you get? How much are you projecting operating expenses are? 10,600. Everybody get that? 10,600. Now, how'd you get that? How'd we get 10.6? There you go. So you took your percentage, you multiply it by your projected sales, and you got 10.6. That's a starting point. But you know more now than you did about your business before you did that calculation. Okay? Now, what was the interest expense? Well, it was 2% of sales. What did you project it to be? I have $26.50. Y'all get that? Now, what we have to be careful of when we use this process is if we don't have any other information, that's a great way to approach it, right? It starts to tell us about our business. But then we also have to think about, does interest expense change based on sales levels? Does the amount you make a payment each month change based on sales? No, right? Your payment to the bank or to the lease company or to the landlord is set, right? So while I may look at these other costs and say, yeah, in the absence of other numbers, that makes sense, but I have other numbers, I have other information. And so my interest expense from 2019 is probably not going to change a whole lot because the payment's set, right? Let's just assume that the payment is set. So while I may do this for all of those items, the cost of goods sold and all those operating expenses, I have to also go back in and say, is that true? Does that make sense? In our operating expenses, it gives us a great starting point. But if I look at interest expense, I'm going to say that's probably not going to change. So I'm going to write through that and write $2,500. Does that make sense? So the tool is not a perfect tool, but it's a really darn good one, because it still expresses a percentage of sales. How much of my sales dollars are going to pay interest expense? I can still calculate that. The percentage and the number is really that cool tool that you're going to use to start to project sales. So if you flip over, hopefully there's a worksheet. And I just saw everybody's anxiety level just jump. Except for yours, you were good. You're like, I do this every day, right? So we're not going to do a test per se. But what I want you to see is this is actually a sheet that I give my finance and banking students, and we actually go through this in class. And we only have like 9 minutes, so we're not going to go through this. But you can, okay? Another great gift from this wonderful partnership here at the Chamber. You have this wonderful worksheet you get to play with. But what I want you to see is this is kind of sort of what you can do with your numbers, right? So you can take your income statement or you can take part of your tax return and you can find what are sales, what is my cost of goods sold, and then calculate my gross profit, and then all of these numbers, all these operating expenses. I can express all of those in this percentage column over here, right? So I can take all of these numbers and divide sales into them and come up with a percentage. And then just what you did for those 3 items, you can do for all of those items. They have to do that, and they have to do it in 15 minutes. If you ever want to see calculators fly, I've seen them just come apart. Just fly apart in class. But you can do that, right? And at the bottom, I list some assumptions. I hope I do. Yeah. So there are some assumptions that they have to incorporate in their projections. Revenues are expected to increase by 10%. Well, they immediately know they're going to take $250,000, multiply it by 1.1, and that's their projected sales. Then everything else is going to key off that in the absence of more accurate information. Tax rates are expected to stay unchanged. They thank me for that. I tell you what the tax rate is. It's 28%. You know it. Pull your tax returns. It'll show you, right? Rent is contractually set at $500 per month for 2018, 2019, and 2020. They should catch that and say, well, this is 2019. The contract is for 3 years, so the same lease payment's going to apply in 2020. So they don't change it. Even though they can calculate the percentage, they need to go back in and readjust that because the lease payment's not going to change. Okay? They have more accurate information than just what that percentage approach shows. Inflation is not projected to change for 2020. That's a fantasy. Depreciation is straight line. We talk a lot about depreciation as well, but we can go in and calculate what that depreciation number is. And again, maybe I don't have a lot of assets to depreciate, especially if I'm a service. Maybe it's just furniture and equipment. That's okay. It really depends on how much depreciation you're expensing and how impactful it is. That's for another seminar, right? Who wants to come back and talk about depreciation for an hour? We can do that. You don't, I understand. But depending on what percentage it is of your revenue, it may be worth sitting down and drilling through, okay? And then what else did interest expense will be the same for 2020, so they're not going to take on any debt. That's what your homework can be, okay? That's where you take today's seminar and say, how do I understand my projections? It doesn't start with this, okay? It incorporates this. It incorporates your numbers. It starts with you sitting down and just thinking about your business, thinking about what sales have done for the last few years, thinking about where I want sales to be in the next year or 2 years. It's about thinking about your expenses. What was a surprise this year that went up? Should I plan for it next year? Do I know what my insurance costs? Have I looked at my income statement and looked at where my money's going? And what do I expect it to do next year? What do I want it to do next year? Maybe I don't want to pay all that for workman's comp, so maybe I need to go price it now instead of waiting until next year when the price is already hitting me. Maybe I want to reprice some of my suppliers. Maybe I want to call them and ask them what do their prices look like next year. Guarantee you, if they know what they're doing, they're looking at those numbers too. They already know what their price increases are because they're looking at the pricing approach that we talked about at the last seminar. How am I going to price for next year? That's your input cost, right? And if they know it and if they're willing to share it, we're able to incorporate it. So what you could do is just take this form, do the same thing in Excel. There's no magic to it. Write your numbers in there from a sales standpoint, from a cost standpoint, do the percentages, and then sit back and look at those and say, does this make sense? Okay, does this make sense? And all industries have some predictions out there. We look at it every day. We look at companies that their growth models look at 1% or 2% for next year in growth based on a lot of research that's done. Some companies are looking at massive percentage growth. That key information, some of which you can find on the internet, and of course everything on the internet is true and accurate, right? So you can go with that. But looking at your sources, look at your mentors, look at the resources that you have. You have bankers, you have attorneys, you have accountants, you have consultants, you have other folks that can help you think through what does next year look like. And so I just challenge you to take that run at that and see what you come up with. And then let's talk some more if you want to talk some more, okay? We can come back around, have another seminar, do one-on-one. But don't not do this, okay? Don't not do this. Taking this approach is you taking your business management to an entirely different level. It's you planning. You'll have confidence in your business, more confidence. You'll feel better about where you're headed, and you won't be to the 7 wins. You'll be charting your own course. Man, that sounded really good, didn't it? Wow, I just rolled with that. So we've got a few minutes. What questions do you have? What questions do you have? Was that worthwhile? Okay. Anything I wasn't clear on or anything you went, wow, I have no idea what you just said? Well, of course, the chamber and all the partners, we're here to help you, okay? And so this isn't an event, this is a process. And so I come, in fact, I'm meeting folks today, I'll be meeting folks. We come, I have an office here in Paducah, and we do one-on-one consulting as well. I'm kind of waving my own flag here a little bit. But this is what your regional university is offering to you, is this kind of support, okay? So through our partners, we make those contacts. Please feel free to reach out to us and let us know how we can help you, okay? Carrie?
On behalf of the Chamber, Murray State, and the City of Paducah, in addition to our seminar sponsors, F&B Bank and Living Well Radiology, thank you for spending your time with us this morning. You, as small business owners, your time is very valuable, and so we appreciate you coming. Millie Reason, I mentioned her earlier, she's the City of Paducah, she's a business development specialist. Millie, do you want to add any more comments before we
we leave today? Sure. Just know that when you do things like this and you take education seminars, you're investing in yourself, and by investing in yourself, you're investing in your business, so it's always a smart decision. Please watch for more seminars, more education opportunities coming out from the Chamber and from Murray State. And again, I work with entrepreneurs every day to connect them with resources. So if you have help or questions about your business or about doing business in the future, please let me know.
Thank you all.